official data from Rwanda Development Board shows that Rwanda's tourism revenues increased to $445 million in 2022, and that's up 171.3% from the previous year, with nature-based tourism bearing the potential to drive the country's economic growth. Gorilla trekking, a unique tourist attraction in the East African country, generated revenues of $113 million to the government institution. The country attracted about 110,000 visitors to its national parks in the year in consideration. And from Rwanda, we go to Tanzania, well, more of Africa, because Tanzania has unveiled ambitious plans to construct what would be by far the largest bridge in Africa, a 50-kilometer structure connecting the mainland to Zanzibar Islands, and it's all to boost trade. Well, the country has been looking to diversify the economy of Zanzibar Islands, home of 1.6 million people, which depends mainly on tourism. Deputy Works and Transport Minister Godfrey Kasenkaya said that the government was talking to prospective Chinese investors about the plans to finance the 50-kilometer bridge between the coastal city of Dar es Salaam and Zanzibar. And moving on now, we go to Ghana, where it's a bit of good news for them also, because the Electricity Company of Ghana has recovered 3.1 billion Ghana cedis from its nationwide revenue mobilization exercise. The figure was released from a targeted 5.7 billion Ghana cedis owed the power distribution company by individuals and corporate bodies in unpaid bills as at the beginning of the exercise, which was March the 20th this year. Meanwhile, the company has earmarked the last week of every month for revenue mobilization in an effort to retrieve the remaining 2.6 billion Ghana cedis. Now let's go to Kenya. Kenya has been in the news recently. Remember that protest that started last year took a break and was supposed to continue again yesterday, but well, we did hear that the opposition had agreed to suspend that anti-government protest after reaching an agreement with the government of President William Ruto. And we look at the reason why this protest even started in the first place, which is rising cost of food prices. And prices have been rising gradually in Kenya since 2022. Drought only added to it, to that food shortages and increased prices. Of course, there's also Ukraine war, and costs have stayed very high. Now let's have Matt Kindiger join us now to take a deeper look into the causes and possible impact of this. Hi, Matt. Good afternoon. So we see these obvious reasons. Are there some other reasons that we're missing that have caused this hike in food prices in Kenya? Even though it's not just Kenya, we see a hike in food prices in almost every country at this time.
Yeah, well, thanks for having me on the program today. So, yes, Kenya is not alone in terms of seeing high food price inflation. You know, here I'm based in the UK. We've also seen a substantial increase in food price inflation, and this is being driven by high agriculture commodity prices primarily. So, in Kenya's case, the country, although it produces large amounts of its own food, it does also import large volumes of certain commodities like cereals, oil, sugar, for example. But the situation has been aggravated in Kenya by currency depreciation. The shilling has lost increasing amounts of value against major currencies, including the dollar, over the last few months. And this is driving up the price of imported food products into the country. But also Kenya is particularly vulnerable to high energy prices, and this is because it imports most of its energy requirements. It is not a massive domestic energy producer, and this contributes to rising costs for food manufacturers, for example. But also, particularly in the East African context, the drought, adverse weather conditions, which is lasting for a very long time, is contributing to weak food production and therefore squeezing prices for food in the country. The agriculture industry is the only industry that has contracted in real terms over the last year or so, and this really is a reflection of the severity of the drought there. So certainly a broad range of factors in Kenya, some of which are global, but some which are unique to the country in terms of driving up food price inflation.
So these factors, they don't sound like the protests can easily solve it, or the fact that the opposition agreeing to stay off the streets will solve the problem. Do we expect more highs when we look at the inflation numbers?
Yeah, I mean, that's a very good point. So unfortunately, there's very little that the government can do immediately, short of price controls, but that isn't really a sustainable or long-term solution. Yes, because these factors are largely out of the control of the government. But what we have done in terms of the outcome for, or the outlook for the inflation forecast, we have revised up our inflation forecast quite substantially for Kenya. So we were previously forecasting headline inflation to average about 7% this year, when we've now revised that up to about 11%, which is quite high by Kenyan historical standards. I believe it will be a 5-year high for the country. And this is largely being driven again by continued currency depreciation. We are forecasting even more weakness in the shilling, so this will continue to drive up the price of imports. We're also seeing globally, actually, although agriculture commodity prices have eased slightly over the last few months, our view at Frontier View is that we expect agriculture commodity prices to actually increase quite substantially in the second half of 2023, and Kenya will be vulnerable to this. And this is because of a stronger global economy, especially driven by China sucking in demand for food commodities. So certainly we are expecting global agriculture commodity prices to rise further in the second half of the year.
All right. So briefly now, Matt, because we're almost out of time, how do we expect all of this to shape the political landscape of Kenya?
Yeah, so our view is that it probably won't have much of an impact, although it does, rising food price inflation could stoke more unrests, especially in the second half of the year, depending on how bad they get. But actually, we do see in the short term some protester fatigue setting in, as you mentioned just now. Mr. Odinga has suspended protests. There is a bit of concern that the protests are not really achieving their desired outcome. We don't really expect the government to shift substantially in terms of policy. It doesn't have much fiscal capacity to introduce subsidies, for example, or price controls. So really, we don't see much of a shift. If anything, there's probably going to be a little bit of risk of social unrest in the second half of the year, but nothing fundamentally will change in our view.
All right. Thank you so much, Matt Keninga, Practice Leader, SSA Frontier View. Thank you for sharing your thoughts with us.
Thanks for having me today.